Plan Well, Enjoy Life is presented by G. Pollock Financial in Bend. Send us your questions now. Email us at planwell@gpollockfinancial.com or call us at 541-480-1661. Discussions on this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer member FINRA SIPC. Securities offered through registered representatives of Cambridge Investment Research, Inc., a broker-dealer member FINRA SIPC. Advisory services offered through Cambridge Investment Research Advisors, Inc., a registered investment advisor. G. Pollock Financial and Cambridge are not affiliated.
All right, welcome. Thank you for joining us. I'm Greg Pollock with G. Pollock Financial. You're listening to Plan Well, Enjoy Life, a 30-minute program designed to bring some rational thought to an increasingly irrational economic landscape. Today, we're going to revisit one of the more dynamic asset classes, and certainly one that has been a top performer so far this year, namely real estate. And while real estate is an integral part of most portfolios, we can't effectively discuss it without talking about the local real estate market, since it's such a dynamic part of our local economy. With that said, I am pleased to say we are joined by Christine Browning of HomeSmart Central Realty here in Bend. Christine has a background in banking, and during the crisis made a wise move into real estate, where she manages a team of, I believe, close to 20 people here in Bend. Is that right?
Correct.
And aside from being known as the realtor with a banking background, Christine and her team were ranked, I believe, number 1 in Bend, number 1 in Central Oregon, and number 12 in the country, based on a recent Wall Street study, which is just outstanding. In addition to Christine, we are being joined by Amy Moser, also with HomeSmart Central Realty. Amy, in addition to her work in real estate, has significant experience in the financial services industry. So I guess you could say that Amy is the realtor with the financial background. And to stick with that theme, I guess that makes me the financial advisor with the legal background. Apparently, you just can't be good at one thing anymore. So, Christine and Amy, thank you guys. Welcome. Thanks so much for being here.
Thanks for having us.
All right, so you both have a lot of experience in the local marketplace when it comes to real estate. I'm curious to know how Central Oregon has fared compared to other places in the country. All right, so Christine, with your background, do you have any recent statistics in terms of pricing and movement of real estate in the local market?
Well, Bend always seems to be making national news, is what I'll say. We were number 2 for growth.
Ever since the pregnant man.
It's pretty crazy. I used to live next to the pregnant man, if you can believe it. Anyways, I mean, Bend was like number 2 in the bubble. They had the most growth. And then we were number 2 when the bubble burst, in losing 50 to 60% of all value of real estate across the board. We have now rebounded, and there was an article earlier this year that we were number 2 for real estate growth, about 19% in the last 12 months. So
that's a lot of number 2.
Bend continues to make national news. It's certainly been very interesting for Amy and I to kind of be a part of purchasing homes in the bubble, watching so many people lose their homes and lose all their equity, to then watching the market recover. I mean, it's been a wild ride. No question. I mean, real estate, as I understand it, the overall asset class did about 16% so far this year, more than double what the S&P had done. Do you believe we've recovered? Are we at full recovery, or do we still have a ways to go before we get there? I believe we've mostly recovered. Most folks who are over-leveraged or bought homes just as an appreciation investment, most of those folks have either sold, walked away, settled up with their bank. We're not seeing hardly any short sales or foreclosures in our local market at all. Okay. Most people who were able to buy in 2009, 10, or 11 have actually made a tremendous gain over the last couple of years. So they're profiting. If it was a primary residence, they're able to pull those profits off the table tax-free, which has been wonderful for a lot of folks. Mm-hmm. I am seeing people currently selling their home that held off when they saw their home's values drop so much, and now their home has recovered enough to where they find that it's worth selling. Okay. So yeah, I would say that we've recovered. We're not at where we were at the very high of the market, like 2006 was the absolute top, but we're probably about 80% of the way back up to the top. All right, that's pretty good. And you talked about we're not seeing so much in the way of short sales so much anymore, and I know some of the concerns have been, do you think there are a lot of people that could have still been hanging on where we might still start to see those come in and flood the market, or do you think we've sort of flushed most of those out at this point? Those have been mostly flushed out. There are still some folks who, believe it or not, are still fighting with their banks. It's absolutely amazing. People, maybe back in 2009 stopped making payments. They were told to stop making payments by their banks, and the banks promised them that they would do a loan modification. The banks have never approved any loan modifications and have not foreclosed or modified their loan. So it's amazing when Amy and I get a phone call from somebody who says, it's been like 4 years. I don't know what to do. Maybe we should just sell and move on. And oftentimes we're finding that the home is now worth more than their mortgage. So we can at least get them out from underneath it.
So at least they're not underwater anymore.
Exactly,
Right.
exactly. But there's very few of those. I'll say we don't see that very often.
All right. Well, then let me ask you this. Let's go to the other end of the spectrum. Do you think we're in another bubble with this much growth recently?
It's a great question. It's the question on everybody's mind. I think I must get that asked about 8 times a week. I don't believe we're in a bubble, but I have to say I am overwhelmed with how quickly the real estate market has rebounded. I mean, it's very surprising. When you look at like our local number of up 19% in 12 months, that's staggering. I don't think that we can possibly continue to have appreciation at that rate without looking at another bubble. Now, with that said, in my opinion, part of the reason that we've seen this increase in housing values is the interest rates have been held so low that it's become a desirable investment. It's better for people to buy a home than it is to rent. So I don't think we're in another bubble. I guess the main reason I don't think we're in another bubble is because the risky financing is not being done, which was being done back in 2002, 4, 5, and even 6, where just about anybody with a pulse could get a loan. Mortgage brokers were relying on loan applications of what applicants actually made for income, and people were being given loans and houses that they had no business being in. I have not seen any of that go on since I've gotten into the business. So people who are in a home loan can afford it unless something bad happens and they lose their job.
That was going to be my next question, because my impression is that even though we've had a lot of activity in the real estate market, it's really only those who either have impeccable credit or just a lot of money on the sidelines who are able to facilitate this, and there's still a lot of people having trouble getting loans. And I talked about this in a recent show, I think it was the one that would aired last week, where what we've done with mortgages is similar to what we did with gas in the 70s, where gas prices shot up, Americans got angry, so the federal government in its wisdom decided to fix gas prices, which made everyone angry until you're sitting in line not able to get gas. And it feels like there's a lot of people out there just sitting in line not able to get a loan, in which case, unless we get some normalization there and some wage growth, I don't know that we may even see a slowdown perhaps in the housing market. We've already had some indications that might be starting to happen. All right, so let's talk about interest rates. We know the Fed is likely to start raising rates somewhere in the next year or so. Mm-hmm. And although we've said that before. So Amy, let me ask you, your financial planning background, you deal with this concept all the time. Do you see a spike in interest rates as being a catalyst for a correction in the real estate market?
I don't see a spike in interest rates causing a drastic correction, but I do think that when interest rates go up, it will stabilize home prices a little bit. It will bring them down and they will flatline. People purchase a payment, so if interest rates go up, they are not able to afford as much house as they had when interest rates were lower.
Good point, absolutely. So even just an incremental increase in interest rate could mean several $100s a month difference for in a monthly payment.
Absolutely.
Yeah, so what it means is buyers can afford to buy less house if interest rates go up. And therefore, we could see, if interest rates go up quite a bit, that it may depress the price of houses, or it may just level off the prices of houses. We might not see them going up as much. It will definitely bring the demand down, the affordability down. Maybe that's not such a bad thing, though.
No, given the quick acceleration in prices that we've had, some stabilization there is probably a good idea. Listen, I want you guys to stay with us. We're out of time for the first segment here. When we come back, we're going to continue our conversation with Christine Browning and Amy Moser. Please stay with us. Welcome back. You're listening to Plan Well, Enjoy Life, a 30-minute program designed to bring some rational thought to an increasingly irrational economic landscape. I'm Greg Pollack with G. Pollack Financial. I'm joined by Christine Browning and Amy Moser of HomeSmart Central Realty here in Bend. And we are going to continue our conversation regarding real estate. Okay, so listen, you guys are talking about, we know that interest rates are going to go up. We don't see that being a drastic problem, but it may normalize pricing a little bit. But you made an interesting point about the difference in what the payment can be. Is there sort of a rule of thumb you recommend when someone's looking to buy a house that they want to keep a payment within a certain range of the income?
Well, I know typically we don't want to go 25 to 30% more than someone's gross income, but you need to take into account all your variable and fixed expenses. And that means child support, that means utilities. you may be approved for a certain payment based on this is 25 to 30% of your income, but you need to meet with your financial advisor and say, is this really realistic?
Amen.
Did my mortgage broker take into account all these other expenses? And if they didn't, you need to do that due diligence with your own advisor.
That's a good point. Just because you're qualified for something doesn't necessarily mean you could take that on, and that's probably where a lot of people ran into problems back in 2006, 2007, would you say?
Yes, absolutely. My dog actually was able to purchase a home in 2007. So he didn't really have to give up any information.
That's very good, because they don't verify income.
They didn't verify
so
income
you
then.
just, how much was your dog earning at the time? Do you recall?
I think he said about 200,000, but it was much lower.
There you go. Please know we are joking. We don't condone mortgage fraud or any sort of fraud on the Plan Well Enjoy Life show. But that was an excellent comment, and that's probably true. Had I known, I would have had my dog and my newborn at the time apply for a mortgage. I'd be in much better straits had I invested that in the market. Again, please don't do that either. Okay, so let's shift gears a little bit here. You know, the real estate market is fairly tight here. We had a few years ago a lot of empty lots that are now getting built on. There's hardly any empty lots that don't have some activity anymore. At some point, we're going to run out of those. We have a very, very tight rental market out there now. And so not only do we have a lot of people renting, but there's a lot of people who own rental income properties. Do you think we're going to start seeing a crunch in real estate where rents get a bit out of hand due to high demand and low supply, or we end up with a lot of people just moving away because they can't afford to live here?
No, I don't think. I mean, I'm not seeing any signs of a real estate crunch. We have low vacancy in rentals right now because so many people had to walk away from their homes in 2009, 10, and 11. However, most folks are able to qualify for an FHA loan in 2 or 3 years after a short sale or a foreclosure. So what I'm seeing is a lot of people are re-entering the housing market. Now, where they're re-entering is in the starter housing bracket. So affordable housing, or that starting price point, is probably around $250,000 up to $300,000 at the very top. So I would say we have a shortage of inventory in Bend of the under $300,000 of real estate. But what's interesting is I'm seeing a lot of these big builders have picked up lots and properties, and they're building affordable housing. So we're seeing a ton of new inventory hit the market that is within that affordable range. So it all, somebody buys a house, they move out, it opens up their rental for the next person who rents for a year until they can buy a house. But overall, I have not had a seller that couldn't find a rental. Everybody does seem to be able to find a rental. Now, one other surprising thing that I'm seeing is the market in Redmond is booming. A lot of folks are choosing to purchase a home in Redmond, and they just make that commute. It's 14 miles. They might just make that commute from Redmond to Bend if they work in Bend. Although a lot of people work in Redmond, or they work in Madras, or they work in Prineville, and Redmond is really taken off, and there is a ton of available inventory that's affordable in Redmond, and we're also seeing a lot of new construction there as well. So the urban growth boundaries are going to be expanded. I do think we are going to continue to see Bend and Redmond grow, and we're going to continue to see new housing opportunities come for anybody who wants to have that American dream.
That's a good point. My wife and I were driving back from Portland a few weeks ago and noticed some amazing houses with a lot of land being offered for extremely reasonable prices. And what you're giving up is the location. You've got to have that commute. But my family and I, we moved here from Atlanta, and Atlanta is a big metropolitan area surrounded by all these suburbs. 30 years ago, all those suburbs were separate towns, like Redmond and LaPine, and eventually we may end up with some sort of big megalopolis here in Central Oregon.
I think so. I mean, with the university being built and the desirability of Bend, Oregon, I think we're going to continue to see expansion. Bend and Redmond will get closer and closer together. And 14 miles just isn't that much. For a lot of people relocating here, that's not that far to drive.
It's really not, until it gets where Atlanta was, and I sat in traffic for 3.5 hours each way trying to go 14 miles. Hopefully we're at least a couple decades away from that.
Yeah, I hope so.
So we can all sell out with a nice profit on the real estate that we made because we bought during low interest rate points. That's a good point. Okay, so here's another question for you. Something I ran into recently. Janet Yellen was recently testifying before Congress, and they were talking about the concept of student loans and student debt and how crippling that is for the younger generation. And they're talking about a dynamic coming down the road where those who go to college are less likely to be able to afford a home than those who don't. And I'm curious whether you guys are seeing anything like this at this point in time.
Well, it's an interesting situation. Both Amy and I have college daughters. They're both on their second year of college. And her and I have had so many discussions amongst each other, as well as with our daughters, as well as with other parents, on how the heck do you afford college? We don't want our daughters to go into debt, but college is tremendously expensive.
That's right.
And to have our daughters finish a 4-year degree and struggle even to find a minimum wage job while being saddled with $50,000, $60,000, $70,000 of debt is just absolutely staggering to me. So I don't know what impact this is going to have in the future, but I do know that lots and lots and lots of students, they have all this debt, they're not going to qualify for houses. And as long as lending doesn't go back to where stated income, we are going to see a generation that won't be able to afford to get into a home until they get that debt paid off. Amy and I are asking each other, does this mean that our kids are going to stay home until they're 30? They're going to go to school, get a job, pay off their debt, and then move out and buy a home at 30.
That is frightening for a lot of people. Amy, if I'm not mistaken, you actually want your daughter to stay home until she's at least 30. Is that correct?
That's actually changed since she's turned 21.
I see. Yes,
I decided that may not be the best thing for her or I. But, kids going into college, a lot of them don't even know exactly what they want to do. Those that go in with a strategy and know exactly where they want to go, they're still going to incur a tremendous amount of debt. Then there's those that switch midway, and it takes that much longer. It's something to consider, and while kids are trying to figure out where their passion lies, it's not a safe place to be, in a place where you're going to assume a whole bunch of debt while you're trying to figure that out.
Absolutely.
Well,
absolutely.
This is definitely going to make a difference when we see this generation getting ready to want to buy a home. We may see a big drop off. I don't know how they're going to qualify with all those student loans until they get them paid off.
Well, as we've seen these universities, you've got them everywhere now, and they're sort of in their own little bubble, and it doesn't quite mesh with the rest of reality. There's probably going to have to be some fundamental shift there, but until that happens, this is only going to worsen. Okay, listen, guys, this is really awesome, so I want you guys to stay with us. When we come back, we're going to wrap things up. Christine Browning and Amy Moser. We're having a very dynamic conversation on the real estate market. Please stay with us. All right, welcome back. This is Greg Pollock with G. Pollock Financial. You're listening to Plan Well, Enjoy Life, a program designed to bring some rational thought to an increasingly irrational economic landscape. Today, we have the pleasure of having Christine Browning and Amy Moser from Home Smart Central Realty. We're talking about the real estate market. All right, look, guys, we've covered a lot of ground today. We've talked about interest rates. We've talked about whether we're in a bubble. We've looked at the rental market. That's only going to become a bigger issue. You've got more people who want to live here than we have houses at the moment, although there are some supply side things improving. What do you recommend in this sort of environment? Do you always recommend owning versus renting?
Well, that's a great question. You really have to take it on an individual basis. If somebody is in Bend, but they don't have steady employment and they're not sure if they might want to relocate for a better job, they probably should hold off on buying, because there's no way to know if the home they're buying is going to go up in value enough to sell it and cover the closing costs of selling. Generally speaking, I'm a big believer in owning your own home. I think throwing away money every month to rent just doesn't seem like a great idea unless it's for a very short period of time. I think everybody should have the pleasure of owning their home, having a fixed payment, not having to worry about being uprooted down the road. Mm-hmm. So generally, I would say, yes, I think everybody should move to home ownership if they plan to stay here for probably at least 3 to 5 years.
Okay, that makes sense. Amy, final thoughts, renting versus owning?
Well, one of the biggest advantages is that mortgage interest deduction. People who are paying $1,500 a month in rent, they're not deducting any of that, nor are they building equity. And it's not, if you are able and it's the right decision for you to purchase a home, I absolutely recommend doing that over renting any day.
Absolutely, because in fact, what you're doing, instead of building your own equity, you're paying someone else's mortgage payment and helping building equity for them, much less the fact that you lose the control. And we saw a lot of people, even when I rented when I first got out here, it was owned by a physician who filed bankruptcy. We had to move, but fortunately we found a good opportunity to buy, and we're very happy with that. Thank you guys so much for being on the show. There's been a lot of fun. We could probably do this for another hour. They tried to convince me to do this as an hour show. But just a reminder, having Christine and Amy on the show is not a specific endorsement of them or any particular realtor. However, if you want more information from Christine or Amy, feel free to give them a call at 541-323-1012, or you can go to their website at christinebrowning.com. Thanks, guys. I hope we can have you back again sometime. This was a lot of fun.
Thanks so much. It was awesome.
You are too kind. Okay. That's going to wrap it up for today. We had a question, but I think we're going to hold off till next time. But please continue sending in your questions. We've got some good ones in. Call us at 541-480-1661 or email us at planwell@gpollockfinancial.com. Remember, if you've missed previous episodes, you can go to my website at www.gpollockfinancial.com and click on the tab called Radio Show. We've got several past episodes available for listening, and we'll have this one on there soon. As usual, I want to thank the folks at Horizon Broadcasting Group who made this show possible. A specific thank you to Aiden Clemens, the producer of the show, who literally works magic to put the show into some sort of coherent format. And I suspect she had her challenge with this one. So thank you, Aiden. She is, but her dad works here. I can't say that. So thank you, Aiden. None of this is possible without you. Until next time, this is Greg Pollock with G. Pollock Financial, urging you all to
plan well, enjoy life.
Plan Well, Enjoy Life is a presentation of G. Pollock Financial. Call Greg at 541-323-1008 and tune in next Sunday for another edition of Plan Well, Enjoy Life.